In today's weekly Forex forecast, I'm sharing my exact trade plan for the DXY, the euro, the pound, and also gold. So we're going to talk about price action, SMC market structure, key areas of interest, and also targets, setups, all that good stuff. And markets actually look pretty good right now, so I'm excited to share this with you. So looking at the DXY, first, I want to mention here that on the daily time frame, I want to talk about this first before we get into the intraday charts, because the market has been sideways here for the last few weeks. And I want to point this out first because we have these lows back here around right around 99. Okay, off of these lows, you can see that's getting tested here today. The market is bouncing from this. And we also have this kind of key pivot on the daily right around 99.4 that we've talked about before. This actually generated a buy here recently because you can see that back here, we had resistance through here. We had the close above, retest as new support exactly back here, and the push back there toward those highs. Now, at the moment, the market is bouncing from this region, okay? But I'm not so interested in where we close today in this level. What I want to talk about here is the fact that, yes, we have the lows back here. However, what happens a lot of times in these markets is, and traders get this a little bit mixed up, is that you can see that off of these lows back here, we start to draw trend lines like this. Now, I will tell you that this is the bottom of an ascending channel, okay? And what happens, though, is that traders tend to look at this right here, and they think that, okay, we are breaking down from this trend line. Therefore, this is a change in trend. This is a change from bullish to bearish. And it could be, okay? But in terms of market structure, technically speaking, what is going to shift the market structure is a break of the lows. Now, the question is, which lows? And this is, again, where traders get this a little bit mixed up because they start looking at this low back here. And they say, okay, if we break this low, then we're breaking out of this range. Right? We've broken below this trend line and then we're going to turn bearish. But that's also not necessarily true because if you look here at these highs, okay, these highs back here did not break this high. We did not close above this. We didn't close above it on the daily. We didn't close above it on the 4 hour. So what that means is that this down here, okay, this low right here is not the low that is going to shift the structure if we break it. The low that's going to shift the structure if we break it is going to be this low right back here, right around that September FEG, which is unmitigated at the moment. So this low back here is the one to watch. And the reason for that is because it's always the low that produced the last break of structure, okay? So if this up here, if we take a look at this, this was the break of structure on the daily, okay? So we had, let's mark this out here. We had off of this high, we had this area through here. This was our break of structure, okay? So I'm going to remove this here just to kind of clean it up a little bit. This was our bullish break of structure. Here we had the high, we had the pullback, we had the break, okay? Now, once we have that, we then use the low that produced that, okay? Now, you could technically use this low. You could also use this low back here. But the point being that this low right here is, at a minimum, what sellers would have to take out here on this DXY chart to turn this truly bearish. And I want to mention this first because I don't want you guys getting trapped if we close below here, thinking that the trend has changed and try to start shorting the market down here in this region, because again, this is the low right here that triggered the last break, not this one. This low did not do that, okay? So I just want to point that out first and foremost, because again, I don't want you guys getting trapped down here if we do break below these lows over the coming days to start getting bearish because we have a September FEG, an unmitigated FEG on the monthly time frame, which you can see what I'm talking about here if we go to the monthly time frame. So we just closed up November, and looking here at the monthly, you can see that this is the September high. Okay, so unmitigated so far. This is the September high. We closed above, we traded up here, and now we just closed up a month. This is still open for business. Okay, so I kind of think that we could get a push down there into 98.60 or so to fully mitigate that FVG there from September. But my point here is that, again, this low back here did not produce a break of structure. This one did not. So this is not the low that has to be taken out for there to be a true change of character, a bearish change of character for the DXY. It's actually this low back here, which is also right there at that September FEG. Now, in the short term, okay, if we look here at the hourly, what you can see is that the DXY does have an hourly FEG up here following this very aggressive move back here, right? So we got aggressive move lower. We've had a pretty aggressive bounce here so far today. No surprise there. And we do have an hourly FEG back here in this region. So in the short term, what I think we could get here from the DXY And look, looking at this short-term downtrend over the past few days, or really the past couple of weeks or so, what it's going to take for this to reverse. And when I say that too, basically what I'm saying is that this is intact as long as this is the case. So if you look at the highs up here, and what I'm going to show you, this is not a channel in the traditional sense. In other words, I'm not drawing this to show that this is, short from up here, buy from down here, etc. This is what I'm calling a distribution channel, because for those of you who trade SMC, this is going to be familiar because essentially in a range, right, you have the market producing areas of premium up here, areas of discount down here, where you essentially look to long from here and short from here. So this is a similar concept. However, in a trending market like this, it makes more sense, in my opinion, to have a diagonal level like this showing a premium up here and discount down here. So if you imagine a mean or a midline going through here, right, what you tend to get is a market making an equal distribution on either side of that to the upside and downside, right, buy side and sell side. So for now, my point here is that this area up here is going to be the one to watch. Off of these highs, we've got the hourly FEG. If this holds through here, then we are potentially looking at a pushback down there toward that September FEG. Now, if we see the DXY start to climb above these highs, and especially this one, because again, what we have to look at in terms of market structure is what is the last high that triggered the last break of structure, okay? So is it this one right here, or is it these highs, or is it this one? In my opinion, it's this one, okay? Because right here, we just went sideways, right? If we had pulled back more through here, then I would use that high. But because we went so sideways here and there really wasn't much of a retracement, I have trouble using these highs as, a potential trigger for a change of character. In my opinion, as long as we're below this high back here, then we have that potential for this short-term downtrend to stay intact and target that September FEG. Okay, now if we were to take out this high back here, then of course that could shift things. But for now, my base case is a continuation of this trend down there toward that September FEG around 98.6, okay? So that's what I'm looking at now for the DXY. And this is going to play into obviously the euro, the pound, and even gold when we take a look at those charts. So moving on to the EURUSD. So looking here at the 1 hour time frame. And actually, you know what? Before we do this too, let's start with the daily. And by the way, guys, if you are enjoying this content, be sure to subscribe to the channel and also smash that like button. I always appreciate it. So looking at this market here, you can see that we are starting to break out of a channel here. However, again, I'm not really using this as a breakout, so to speak. In fact, I never really did. I always needed multiple factors in my favor, and this was just always one of them. But regardless, you can see where the market is starting to push above the top of this channel. But the point I want to make here is if we look at the 4 hour time frame, very much like the DXY, if you'll notice here, right, these lows back here, we did not break this low. Okay, so we did not have a break of structure on this push lower. So therefore, it is not this high, right, that's going to potentially trigger a change of character. In other words, a move from bearish to bullish. The high that the euro has to take out is this one back here. And the reason for that is, again, you look over here, we had a break of structure. We move back to the last high. It's this one right here. So that's important in terms of overall market structure, because basically, as long as the euro is below this high right back here, so if we map this out, taking off of this high, as long as we're below this area on a 4 hour closing basis, hourly, etc., then technically this downtrend is intact. Okay, so that's important to understand here in terms of the overall market structure for the euro. Now, when we look at something like the hourly, okay, dropping down here, what I told VIP members in Discord this morning, and this is the advantage of being in Discord, is that you do get those real-time updates. But what I told them was that we were coming into premium here in terms of this distribution channel. So once again, you can see where in a trending market like this, you tend to get the market moving within equal distributions of that midline, okay, or mid-range. So through here, here's your mean, and you get equal distribution on either side of this, okay? So right now, with the euro coming off of this area, a pullback was likely. However, we do have buyers in control here over the past couple of weeks. So you can see that back here, we do have these highs through here. We had a break of structure, bullish break of structure, pull back down here into those inefficiencies and the bounce. Now, this here again was your high, okay, your external high within this range. And then from there, we got a break of structure. So again, buyers are still in control, right? This is not to say that just because we're testing up here that you want to go shorting this market, just because, again, buyers are in control right now off of these lows, okay? So with that in mind, one pocket that I'm watching here on the euro is down here below these lows right around 115.89, okay, or really 115.90. And the reason for that is you can see that back here, we have equal lows off of this area. So we have equal lows here. We've got another equal low, right? And so what that means is that liquidity builds up below lows like this. Markets seek liquidity. So in my opinion, this is the area down here that I want to see swept before I even start looking for a long, because I can't justify looking for a long when I've got equal lows like this, just below current levels, knowing that there is sell side liquidity that builds up below these. Okay. So that's what I'm looking for in terms of the euro. Now, and when we get down here, and this applies to all markets, not just the euro, and by the way, too, we've also got that 1 hour bullish FVG back here as well. So we've got this fair value gap down here off of this high. This is unmitigated, again, right there in that region. Okay. So this is really the pocket that I'm watching here for the euro down here in this region between 115.78, 115.90. And when we get down here too, and this applies to all markets again, this isn't just the euro, but what I will be looking for is I will drop to the 15-minute, 5-minute, even 1-minute time frame and look for that bullish change of character. Now, the reason that I would drop to a 1 minute, that might seem kind of crazy for those of you, especially if you know that I trade high time price action, is that my area of interest is so tight here that it really doesn't matter if I'm on the 1 minute time frame, because this isn't a matter of just looking at the 1 minute time frame and just, hoping for the best. It's a matter of I have this area of interest down here based on several factors. And from there, I'm looking for a drop down here, okay, lower highs, lower lows down here in this region, and then to get that push above one of those highs, right, that bullish change of character, and then get the push down here into sell side inefficiencies to look for the long, okay? So that is the play for me every single time within the context of this channel, okay? Within this distribution channel, we've also got, again, we've got these areas down here, these equal lows that probably get taken out over the coming days, or at least I would like to see that before looking for a long. We've got that 1 hour FEG, we've got the bottom of this distribution channel. And furthermore too, if you look at the fibs here, right off of this recent move, you can see where off of these lows and up here to the highs, you can see where the 618 or 786, comes in down here right around that 1 hour bullish FEG, okay? So we've got the 618 close to those equal lows. We've got the 786 down here in this region. So really this, again, is the pocket I'm watching. But from there, it's going to depend on what we get on the low time frames. Do we get that bullish change of character down here to constitute a move higher and a pushback there toward the highs? Now, in the case of the euro, if we get that, my target here is pretty clear, because it would be, first of all, a move back here toward the highs. So if we get the continued pullback here from the euro, we get bullish change of character through here. And by the way, if we don't get that through here, if we don't get that bullish change of character and the market just punches right through here with lower highs and lower lows, then there's nothing for me to do. Okay, but if we do get this here, right, if we do get a bullish change of character down here in this region, right, something like this to confirm that this is the bottom, then my stop goes below the low. I'm looking to buy against those inefficiencies that develop through here. And then my target, my first target here would be this high up in this region. You can also target, obviously those highs up there around 116.68. But really, ideally, when you look at this here, the most logical area to target would be that recent high. All right. Now, again, if we punch through this, though, and we get no, bullish change of character down here, then there's nothing for me to do. And I just stand aside. Now, looking at the pound, this one also very interesting here. We do have the market, though, in a downtrend. Same thing with the euro. And I really want to highlight this, that even though I'm talking about looking for buys here, this is all short-term stuff. Because if you look here, really the highs that the pound would have to take out here on the 4 hour time frame go all the way back here at a minimum, right? Really this one back here, which is quite a bit higher than where we're trading right now. But the reason for that is, again, you look at the low back here. This was the break of structure. You track this back to the last high. It's this one or even this one. So we are nowhere close right now on the pound to shifting this bearish trend that started back there in September. So I want to be really clear about that even though I'm looking at, potential short-term buying opportunities, these are short-term buying opportunities. This is not to say that these markets are now bullish long-term. So with that said, looking at the 1 hour time frame, one area I find really interesting and similar to the euro, guys, I want to see these lows get taken out. And this was the US holiday last week. And, the lows that like this during a holiday period, you've got a weekly bullish FEG back here. I want to see these lows get swept. But really, when you look at the pound, my area of interest is even lower than that. Because if you look here at the hourly, what you're going to notice is we have this lower wick right here. Okay, so 50% of this lower wick is right there around 131.48. And furthermore, and I should have started here, but looking at the monthly time frame, right? If we look at this, because November just closed up, what you'll notice is that we have these lows right back here. Okay, so right around 1.314. So we have monthly lows back here, right? We closed above it in November. Okay, so 131.40 lows back here. We've also got, like I said, the 50% of that 1 hour wick right around 131.48. And then if we move in here, and by the way, too, you can notice here, September low, right? September low unmitigated back here in this region, right around 1.3324. So that's another factor there to keep in mind for the pound. So looking back at the hourly time frame, what we can see here is that that's the 50%, right? 3148. That's the 50% of the 1 hour wick. And then if we move to the 30-minute time frame, what you'll also notice is that we have a 30-minute bullish order block. Okay, so we have this red candle right here. Okay, so down candle right here, bullish candle, FVG. Okay, we never came back here and touched this high. Therefore, we have a bullish FVG through there. So this order block created the FVG, right? So that's one factor in our favor here. The other factor in our favor is that this is unmitigated. Okay, we haven't seen the market come back here into this order block, into this region. Okay, so that's another factor in our favor to keep an eye on this area. Another factor too is that you'll notice that this actually produced a bullish break of structure. So we had the high back here, we had the pullback, right? The order block formed, and then we broke, okay? So a lot of factors, guys, going into this 1.3148 area. And furthermore, on top of all that, if we go here to the 30-minute time frame and zoom all the way out to capture all of November, turn on TPO, time price opportunity, this shows you the market profile for every period. If we move this to a monthly period, okay, this right here, and this might look confusing, guys, but it's very simple to understand. This red line right here is where the pound has spent the most time in November. Okay, so all of this price action from the high up here to the low down here, the period where the pound has spent the most time is right here at this red line, which you guessed it, right around 1.3148, maybe right around 1.315 or so. So again, there is a lot happening down here in this region. It's a massive confluence for the pound, and it's certainly one to watch. But again, like the euro, like I mentioned before, though, the key here is that if we do get the push lower, what's going to be critical on the low time frames is to see that change of character. So it's not good enough to just look down here and just buy and hope for the best. Because furthermore, you could buy here, and where do you place your stop? Do you place it here, right below this low? Do you place it a little bit further down? You have no reference for your stop loss. So instead, what you're looking for is, and again, this is the same for every market, right? It's just wash, rinse, repeat. If we get the push down here, what you're looking for is a bullish change of character. So let's say we get the push down here into this region, right? And then we break above the high. So this right here, okay, this break above the high, this would be your bullish change of character. That shifts the momentum. And then you're looking for buys against any inefficiencies that build up throughout this period, okay? And then, here, if you have this, then your stop goes below the low, right? And then you're targeting the highs back here, or at least I'm targeting the highs back here, and also followed by that September FEG. So target number 1, target number 2. That's only if we get the setup though. And obviously all of this, guys, is always just my opinion. It's never financial advice. This is just what I'm doing, okay? So please make your own decisions. But for me, that is the most logical stance to take here for the pound. Again, of course, it depends on what we get with the DXY too, and that those levels that I discussed here at the beginning of this video. Okay, so let's move along now to gold here. And this is a really interesting chart too, and I'm very interested in this if we get the setup. The big question is if we get the setup, right? I don't know if we will or not, but for me, guys, when I look at this chart, the only way that I can consider a long here is if we get a pullback into discount. So you can see back here, we had a nice, break of structure through here. We got the pullback down here into discount, filling in those inefficiencies that had developed on the breakout. And then we got the push higher. Now we've had a break of structure again off of this high. Okay, so break of structure through here. So this once again tells us that buyers are in control. That means that I'm only interested in looking for buys on pullbacks. But the key there is on pullbacks, right? Because I can't justify buying a market when it's at a premium like this, trading at those highs. So for me, what I'm looking at is, first of all, we have a trend line off these lows. Again, a trend line by itself is not enough for me to buy or sell a market. This is just one factor, and you can see where it comes in down here. This is also usually the last factor that I draw in the chart. This isn't the leading indicator for me to look for buys or sells. Now, looking here closer, what you can see is that we have a weekly FEG. So if we go to the weekly time frame, you can see that this week right back here, okay, and I always do this when a week starts, look at the weekly time frame, mark out any FEGs that form. So we have a weekly FEG right here around 41.32. We also have a daily FEG, Okay, if we look here at the daily time frame, so going back here to the daily, you can see that we have this high right here, which is so far unmitigated. Okay, so we have the high here, we have the close above, we didn't quite test this high. So we have a daily bullish FEG, weekly bullish FEG, all right here in this area between 4,100 and 4,130. Now, furthermore, okay, if we take a look at the hourly time frame, map out our fibs, so from the low down here to the recent high, what you'll also notice is that we have some key levels here, some key fib levels, even though 50% is technically not a fib level. We know that markets love to come back to the 50%. We've got the 50% right there at that weekly. We have the 618 right there at that daily, okay? And furthermore too, this blue dotted line you see here, this is what's called a single print in TPO terms. It is a thinly traded area, typically occurring out of consolidation like this when you get a breakout. And it lines up right there with that daily FEG as well, okay? So this doesn't mean that we will get the pullback. This is certainly not an endorsement to go looking for shorts here on gold because, again, buyers are in control. So that alone tells me that I don't want to be shorting this market. I only want to be looking for buys on pullbacks, but at the same time, I need that pullback down here into this region. Now, same rules apply for me. I'm not going to be looking to blindly buy down here. And this is never financial advice, guys, just my opinion. But if we do get the pullback down here into this region, into this blue box, then I'm looking for a change of character down here. So lower highs, lower lows. And I'm looking for that first higher high within the series, right, to give me that confirmed change of character. So this right here would flip the bias on the lower time frames, looking for buys against those inefficiencies, okay? Stop loss, my stop loss below the low, right? Again, this is not financial advice, but that's how I'm looking to play this. If we do get the pullback, of course, we might not get the pullback, right? It doesn't mean that this is going to happen. And this is why, again, I'm not saying that this is a short, okay? That's very important because right now buyers are in control. And we also have two buy-side single prints up here in this region. So if we get that set up, if we get the market pulling back down here in this area, then I will be looking for a move back here toward the high, okay, back here toward these highs. First target, second target would be this region up here. We have FEGs from the drop all the way back here. Okay, so FEGs back here in this region. We also have two buy-side single prints up here as well, okay? So this is going to be an area that I would be anticipating a retest over the coming days and weeks. But ideally we get that pullback first for really for me to start looking for buys. Again, this isn't financial advice. I can't tell you how to trade, but that's what I'm looking for here from gold. Okay, so the pocket between 4,100 and 4,130. If you want those real-time updates in Discord, though, be sure to join us in VIP. I'll leave a link in the description. You can check out and get lifetime access to us there in Discord, plus the full course and also weekly VIP videos. All right, guys, that is it for today's video. I hope it helped. Again, this is never financial advice, but I truly hope that this video helped. Trade well out there, and I will talk to you again later in the week.